Welcome to our weekly market analysis. This analysis is for April 19th, 2025. I want to wish everyone a happy Easter, and I hope you're enjoying your weekend. Well, let me start with this, and I think it goes along with our mission at RM Smart Investing, that really our goal is to have you become a competent, independent, confident trader and investor. Really relying on social media and the news and others is not a long-term goal. So, and I thought these, again, cartoons are pretty timely. So anyway, I hope you enjoyed them. Um, well, the investment you want to consider is number one, what is happening to the dollar and our long-term bonds? So we will evaluate why they've been going down. Also, the earnings season is picking up. We're getting more and more earnings. This coming week, the major ones, there are many, but the major ones will be Tesla, watch for Alphabet, Boeing, Intel, IBM. So there are more coming up, GE. Um, in our trade of the week, we are going to look at some of the best and worst stocks the week after Easter and some candidates, what they have done in past 10 years. Just again, these are some ideas that you can do your own research. Also, what is happening with VIX? As we look at the charts, it had really expanded. It has been coming down, but are we in a safe zone? Are the markets ready to move back up? One interesting thing is when we look at VIX, we are in a backwardation. That means that the recent, which is the May futures, are actually higher than even August futures. So the markets are looking at this and saying that in a short run, there's still a lot of uncertainty. And also last week, the volume was pretty low. So there's, again, because of uncertainty, there is not a lot of conviction. So last week, the big thing was obviously it was Chairman Powell's testimony. And we're in a lot of other news. The retail sales surprisingly came above the expectations. And the retail sales ex auto also did very well. One of the considerations is that there is front buying, basically because of uncertainty about the tariffs. Maybe the consumers are buying, but this even service industries, the restaurants, they were up. So just one consideration. One thing we see the steepening of our yield curve as we see the 2-year and 10-year spread is getting bigger and bigger. So also, again, we talked about what is happening to yields. We did have, again, there was some technical, we did have basically a little lowering in the yields in UK gilts and 10-year notes. The concern is really the long end, and that's what we want to pay attention. And you can see the spread of US credit is getting between the corporate and high yield was really expanded. We talked about it last week. It has come down a little bit, but those are the considerations. So we want to be thinking about that in the coming weeks. So what kind of a week it was? Well, it was a down week. The Dow was down 2.66%. Big factor was a big sell-off in United Healthcare. NASDAQ was down 2.62%. Well, the Mag 7s, we look at the Teslas and Amazons, they have not been behaving well, so they've been sell-off, and especially after the testimony of Chairman Powell, really dampening any expectations on lower rates. And obviously that affects the technology stocks, especially the big cap, large cap stocks. S&P 500 was the best performing of these indices, down 1.5%. So what gives? Well, S&P, while we saw the technology stocks really going down, we will see that, well, energy stocks did well, and also the financial. So that's again, the difference. What we see is that all three indices, we are in a correction zone, down 12.79 from the highs in Dow, 14% in S&P, and we are almost getting back to the bear market in NASDAQ. Oil is also close to bear market, although we did have a nice jump. We were up 4.4%. Copper was up 3.36%, and gold continues, is getting its all-time high at $3,334, up another 2.6% this week, and of course in the back of a weakening dollar. So as a whole, the markets actually were down 1.23%. As we talked about, again, the Mag 7, the large cap growth, they were down 2.84%, while the US small value was up 1.54%, and the small caps were actually in positive. So let's look at, again, indices. We see, well, from Dow to S&P to NASDAQ to Wilshire 5000, all of them had their death cross, which means the 20-day moving average has closed below its 50, and every one of them were below their 20-day and 50-day moving average, including, again, Wilshire 5000. The yields actually had retracements, came back right to their 20-day moving average and parked there. So we will see what had happened. We were overextended. So, but we are in a support on the yields, but the dollar sell-off has continued, that, and we will review that. And then the commodities had a nice bounce, as we saw with the copper, silver, crude oil, we saw in gold, and again, the weakening of the dollar all went hand in hand. So we see, look at this gold movement, look at the crude oil movement, and also VIX obviously has come down, weights cut in half, and we will see it in the upcoming charts. We will evaluate that. So when we look at our sectors, we see that discretionary is, again, below its 20 and 50-day moving average. But then technology, obviously, not the technology, I mean, like companies like Tesla and Amazon, they're big factors for this. Then we go to communication, and then the technology. Again, everything is under 20 and 50-day moving average. When even look at the energy, which is still under, but of all the ones you see, it had a nice bounce. So that was one of the reasons S&P was not as low as other, down as much as like NASDAQ and Dow. On the other hand, we see the defensive side, the staples, they're actually broken above their 20 and 50-day moving average. Healthcare, again, like other sectors, under, again, utility, another defensive sector, right around this 20 and 50 moving average. Financials also had a nice week up, but they are still below their 20 and 50-day moving average. So are the real estate, although real estate just about to break above the 20-day moving average. Internationally, there's a lot of love for outside the United States for the markets. What we see here is like EFA closed above its 20, right touching its 50-day moving average. Even emerging markets have come close to their 20. We look at Australia, broke above the 20. So you can see a common theme. Majority of the international markets have broken above their 20, and some of them above their 50. China still below 20 and 50. We just had a death cross last week. But then look at Italy. We look at basically Germany. So they all have broken. Mexico, a big one. And then we see Switzerland. So even United Kingdom has broken above. So what about the sentiment? The sentiment is still way negative. Actually, the bullish side went even lower last Wednesday. Uh, uh, but so did the bear. So we're getting a little more on neutral side on the hold for the next 6 months on AAII. The fear and greed has moved up. Remember, we were at 4, but we're still in that extreme fear when it comes to CNN's fear and greed. Even the Citigroup panic, which was in the euphoria zone, well, we are at 0.08, very close at 0. We are not in a panic zone. We are basically in a neutral zone. Now, we've talked about seasonality, and this goes back 30 years, and it looks at what has happened the day before Easter to S&P, and which was obviously before Good Friday. Markets were closed on Friday, so on Thursday, on the 30 years, 73% of the time the markets are up. The day after, 47% are positive. So the chances of being, going down is more than 50%. So not a big one. The average down is 0.06%, but it is something you want to pay attention. It's not a very bullish day. Also, what we found out is that in the past 20 years, what happens if the markets are positive through Easter versus negative through Easter. So this is past 30 years. And for 20 years, 66% of time, 20 times the markets were positive. And for the rest of the year, after the Easter, the markets would be up 11.43%. And 90% of the time, that means 90% chance that it will close the rest of the year in positive. And when we are negative, the chances of the markets closing going positive the rest of the year is 40%. And with the market return up 0.27%. So it's a food for thought. These are, again, probabilities. Again, this is a pretty unique time where it's structurally completely changing with the tariff uncertainties, and things, could be very fluid. Things can really move up, but right now is not a time to be a hero. Another thing we want to pay attention, we mentioned about the correction zone. We are down, between 12 and 18%. As I mentioned, over 20% will be basically be a bear market. But we want to look at different segments of the markets, and this table shows that where are we relative to 52 weeks high. We can see gold was right at 52 weeks high, and basically what we see, the dollar is actually 52 weeks low. So that's a better barometer to see where we stand. And for instance, as far as we look at the commodities, for instance, we see relative to its 52 weeks high, what percentile it is. And then we look at the volatility, the US stocks, the market volatility, ETF, we look at the Bitcoin. So it's a better, rather than looking just year to date, which we look at the 52 weeks range, that's a better barometer. So we see the risk off assets that are up year to date. We see the China is up year to date, and of course the VIX is up year to date. But when we look at this, we see where we stand. For instance, the Mag 7 is up down 22%, which is double where S&P is down 10.69%. But we are much lower range or the quarter of the 52 weeks high. So we can see how far we've come down. And then we see where the bonds are. We see where the Russell 2000 are, the copper, the mid cap, and then of course the MAG. So This is just a visual to tell you what we stand. Also, what is happening to the dollar. So this hopefully help you understand why the long bonds have been going down. Is it because of the China or Japan or foreigners are completely selling? Well, it could be possible. That's part of it. But uh, the objective is the money is not coming in at this time. There's that the fear is because of the tariffs, the US growth is slowing, and the money is, I've said it before, like a river. They look for where is the best path, and they go for that. So the money is moving out, moving away from United States. Inflation expectations obviously is rising, which weakens the dollar. US deficit concerns are rising. And when US doesn't want to import money, that means the exporters from outside, they're not receiving US dollars. So there's less demand, obviously. It puts the dollar that the foreigners are having and then putting it back in long bonds, for instance. Well, they won't have that. And also, again, it's the sentimental side. The foreign governments or foreigners do not want to do business at this time. But also, I believe there's a purposeful fiscal decision to lower the dollar and basically maybe make it more attractive in the long run uh, to exporters in the United States or importing from United States. So um, those are some of the reasons, obviously, what's happening. So let's take a look at the charts. As we can see in the last 2 weeks, what has happened, we did hit that major 127.2% at right around 4,800, 4,837, and then 4,800 on cash, and we bounced back. Now, what is happening? We are really floating around that 78.6 area and 61.8. We did have inside day, if you recall, after this big Wednesday movement, we did have all these inside bars. So we are in a really indecision. We see this wick and smaller candles. But one of the reasons is, looking from the other side, is basically, again, there's a lot of uncertainty. Look at the volume. We had the Easter, Good Friday, the markets were closed. Thursday, we see very small candle with very low volume. Last week was low volume. So there is not a lot of activities. And also, as I have said it before, pay attention to the moving averages. Don't be impatient trying to get into the markets because you're afraid you might miss the opportunities. If you are going to do that, I would get into market very gradually, have a fundamentally sound companies. If you're going to hold them for next year, 2 years to 5 years, 10 years, yeah, I would gradually go in. But for short term, just be careful. We are under 8-day exponential moving average. So in the short run, we still have a resistance. We've been getting rejected at 21-day moving averages. So please pay attention to those. Even when we look at the Bollinger Bands, as you can see, again, we hit our major support and we were outside Bollinger Bands. We came back with a big bounce, huge candle. But where did we go? Again, that 18-day moving average in the markets on S&P. And we are kind of in no man's zone. We are the MACD is pretty flat. And even when we look at the CCI, for instance, I don't talk a lot about that, but the CCI is still negative. So what I like to see with CCI, I like to see in like a 0.5 to give us more confidence. We're still not there yet. And stochastics, we were oversold and you can see we bounced, but we are right in the midline. As far as the weekly goes, the good news is we are above the 100-week moving average after we broke below it, and it goes back to our 2-bar confirmation. We bounced back the previous week, and this week we are right above that. We were outside the Bollinger Band, so we have come inside. And the markets on a weekly basis, stochastic tells us we are oversold. When we look at NASDAQ, again, look at the similar idea, 18-day moving average, 20-day moving average, a huge, again, those are your resistance. The similar idea, we are still negative on CCI, no buy signal there. NASDAQ has been weaker than S&P, as I mentioned, because of the sectors like energy and financials. They did well, even industrial. But NASDAQ, we broke below the 100-week moving average, and we still haven't gotten above that. Although we are oversold on a weekly basis, MACD is still negative. We're getting a little divergence in CCI, but that 100-week is a big resistance, so want to pay attention to that. So we came back inside Bollinger Band. It's a big week coming up, so definitely it's going to be a good barometer of what to look for next few weeks. And Russell, actually, it was pretty flat. When we look at Russell, it was not very small candles, a lot of indecision. And, we were oversold. We've been moving steadily, still not at 50 points in the stochastic, but we are still below a downward slope of 18-day moving average, way below the 100-day moving average. On a weekly basis, we just got inside the Bollinger Band. You can see this indecision, doji, and we are just got oversold in stochastics. When we look at the long term, as far as our long-term support, we see how we hit a big long-term support, bounced back, and now we are in the second support, which has become resistance. So we are also breaking above very short-term 8-day moving average, but we are against the 13 and all the other moving average. Look at how many moving averages are ahead. So a lot of resistance in Russell. We need confirmation on that to move on. The same thing with Dow. Again, that 18-day moving average got rejected. And Dow, again, one of their big components, remember, it's a price driven based on, it's not a market capital, it's just based on the price. And United Healthcare is the most expensive, so they really guided downwards on the Dow. Also, on a weekly basis, we see again right against 100-week moving average. That's really negative. Although we are oversold, we need, and came back inside Bollinger Band, we need to clear this 100-week moving average quickly. When we look at the transportation, again, way below the 18-day moving average. When we look at the VIX, it was very interesting to see that VIX actually doesn't do this to go outside for more than 1 or 2 days. That shows the momentum and the volatility. So we were outside for 3 days. Finally, 4th day, as you know, I say we can't stay more than 5 days. 4th day we came in, and we've been going down, but we are in that 30 zone, which is still volatility zone, and we are still hitting that 18-day moving average. So we are not out of the wood, although MACD has crossed. So we really, like to be around 15, 16. So let's see what happens. Again, there's a lot of uncertainty. I mentioned about backwardation. There's still concerns about the future of VIX. Even VVIX, even on a weekly basis, we were outside Bollinger Band for 2 weeks. Generally, it happens that we stay 1 week. So we finally came this past week, and but we're still away from our 18-week moving average. Even VVIX, we were outside for 3 days and finally came back. The 4th day dropped, but we still above the magical 110, right around that. So above the 100 days. So we really want that consolidation continue and getting the risk off and or the risk off continue narrowing and narrowing. As far as the yields, we mentioned about this 100-day moving average. We did go above it, and then we have talked about it, 2 bars. We came back, hit the Bollinger Band, and where we are now, we are on the 18-day moving average. And we see also, which is good news, that the momentum is down on the stochastics. On a weekly moving average, when we look at moving average, you can see again, we went against 18-week moving average. Although what we see is on the weekly side, the momentum is up, but we are not at 50 yet. So that's again good news. When we go to the other side, look at the 10-year note, we see a bounce, complete opposite, bounce on the 100-day moving average. We see we were oversold and now we are moving up. Momentum is going up, but again, it's under 50. And we did go above 18 and came back right on it. So we're watching that very closely. We like obviously that to continue. When we look at weekly, again, we are right on the 18-week moving average. We just bounced off that. Although we see that stochastics is going down, but we are shaken off the overbought basically situation. One thing we have to really pay attention based on the moving averages, we see we have gone right against the 200-day moving average. So we really need to clear this in order to have a better yields, because that's affecting the mortgage rates, obviously the housing. So that's important. One thing you see the difference now is the 30-year bond has been staying below that 100-day moving average. So there's been sell-off, although we did go up, but we are getting rejected. We are below the 18 and we are below the 100. So let me go back and we can compare this. You see the 10-year, we briefly went under, bounced back, and we are almost breaking above 18-day. But when we go to 30-year, we see that we are actually under 100 and 18-day, and we might even have a dead cross. So we are oversold, so that's good news, but can we break that 100? So you see the long end is where the selling is coming from. And the same thing with dollar. You see that big, after we broke below the 18, couldn't break above that. We are becoming embedded, and MACD is negative, and we have gone below my 99.74 support, although we are very close with that 99.18. If you keep going down, that then really can get to 95 in the dollar. So we're watching that carefully, and basically, again, that's a big factor that we have to pay attention to. On the other hand, we see the euro, although it had a little bit of down day on Friday, it's in moving up. We were outside the Bollinger Band for 3 days, came back in. We are about to become embedded, and MACD is positive. We also are looking at gold. Gold has been very nicely, it's hugging its Bollinger Band, so it's not being really expanded. We go outside, come inside, we are embedded, MACD is positive. You know, the gold I would not short gold. You can take some profits because we're hitting this Bollinger Bands, but it's telling us something. Again, with the uncertainty, with the inflation concerns, with the weakness in dollar, it has become the asset of choice. On the other hand, silver, which we talked about, the combination, the marriage of copper and gold, well, it had a very nice week, and we broke above that 100-day moving average. Although we just came back and touched it, but we still above that, above the 18-day. Momentum is up. MACD just crossed, and that's on a daily. On a weekly, we talked last week that we have bounced off the 100-week moving average, and then now we have gone above the 18-week moving average. Although we're still on a weekly basis, the momentum on stochastic is down. So there's a mixture of things here. So you want to pay attention to that. One of the things is when we look at Heikin-Ashi, you see that linear regression, how nicely we saw that -2 standard deviation. And then now we've had 2 green candles in Heikin-Ashi, and that was our positive momentum coming on a daily basis, and we see MACD cross. So we are in a midline. So it's still green candles. And then when we look at copper, what a nice move again. Copper broke above its resistance. Now we are against 18-day moving average, momentum up. MACD is about to cross, and now you see why the strength of silver between gold and copper. Also, when we look at Bitcoin, again, we bounced up our support at 74,000. We were oversold, nicely bounced. MACD is pretty flat, but we are really hugging the midline. The 18-day, you see, it's become flat. So there's really neutral now. So, and the Bollinger Bands are basically, they're not narrow, but they're not expanded either. So there's a lot of back and forth in Bitcoin. And crude oil had a big move, again, weaker dollar. And we are right against my resistance and also 18-day moving average. We were oversold. MACD is about to cross, so we'll see if we can clear this. If we do, we will, again, the movement will be going to the 100-day moving average, and that's important to pay attention to. Now, expected moves, very interesting week again. We had a huge expectations with $250, and yet we stayed right and not much of a movement Friday and Saturday on S&P. Look at that. So we were right and didn't even touch either edge. On NASDAQ, though, we did touch the lower edge of our expected move. And Russell, again, it was positive, a little bit positive, and we did not touch either edge, which is very interesting. But on the Dow, we did touch the lower edge. Again, and the transportation was mini positive, and we did stay in the middle without touching. The same thing with bonds, we did not touch, which is very interesting. Generally, we touch one of the edges. Gold did go outside and came back right inside. Another in and out option strategy would have worked out nicely. Silver had a nice move, but still didn't touch. That's a big, again, expected move. So we stayed right inside. The same thing happened with financials. We were positive or right flat, actually, didn't touch either side. But energy had a nice week, and we did go and touch the upper edge and came back. The oil came very close to the hitting the upper edge, and Bitcoin hit the lower edge and bounced. So again, please pay attention, especially if you like to play options. It's very helpful. Thank you very much. I hope this was helpful. We will move on to our trade of the week.